Can faster uranium projects close supply gaps? As nuclear energy regains traction, the uranium market is facing a timing problem. Demand is rising, but new supply remains slow to develop, leaving North America reliant on imports and legacy inventories. Triton Uranium's Atlas project in northern Saskatchewan is being positioned as part of a potential solution. The company is aiming to shorten development timelines by combining near-surface geology with existing infrastructure, a model that challenges the long lead times typical of uranium mining. Rethinking uranium development timelines. The renewed interest in nuclear power, driven by decarbonization goals and rising electricity demand from sectors like AI and data infrastructure, is putting pressure on uranium supply chains. Yet bringing new mines online has historically taken years, often decades. Triton's approach centers on speed. Rather than pursuing deeper, more complex deposits, the Atlas project targets mineralization closer to the surface. This strategy could reduce both construction timelines and technical barriers, aligning more closely with near-term market demand. The shift reflects a broader industry rethink. Developers are increasingly weighing not just the size of a resource, but how quickly it can be converted into production. Projects once considered less attractive are being revisited as market conditions evolve and timelines become a competitive factor. Leveraging infrastructure and lower-cost design, Atlas is designed as an open-pit operation, a notable contrast to many uranium mines in the Athabasca Basin that require deep underground development. By avoiding depths that can exceed 1,000 meters, the project may benefit from lower capital intensity and simpler construction requirements. Location also plays a role. Northern Saskatchewan has decades of geological data from earlier exploration cycles, giving Triton a starting point that reduces early-stage uncertainty. Initial work is focused on several priority zones, including areas near historical mining activity. Existing infrastructure could further streamline development. The site has access to established transport routes, grid power, and air support, all of which can reduce upfront investment and logistical complexity. In a capital-constrained environment, these factors are becoming increasingly important to investors and project developers alike. Execution still carries risk. Despite these advantages, Atlas remains at an early stage. A planned 10,000-meter drill program, expected to begin in 2026, will be key to determining the project's resource potential and economic viability. As with any mining project, risks remain around permitting, financing, and technical validation. Even projects with favorable characteristics must navigate regulatory frameworks and stakeholder expectations before moving toward production. Triton has also pointed to workforce development, indigenous engagement, and environmental considerations as part of its broader strategy. These elements are now central to project approval and long-term viability, particularly in established mining jurisdictions. A timing-driven opportunity. The Atlas project ultimately hinges on whether faster development can translate into meaningful supply. If successful, it could offer a case study in how uranium projects adapt to a market where timing is becoming as critical as scale. For the wider industry, the question is less about resource availability and more about execution. As nuclear demand builds, the ability to deliver supply on shorter timelines may define the next phase of uranium development.